what is the difference between a coin, a token, and a crypto ETF?
It's a good question because I'll be honest, I think I was like maybe 3 or 4 years, probably 3 years into crypto. I couldn't tell you what a difference it was between a coin and a token. You hear it and you're just like, oh yeah, that's what it is.
They're used pretty interchangeably, but there actually is like a separation between the two.
That's right. So like a coin, we'll use Ethereum. So Ethereum, basically, it is a coin. It creates the Ethereum ecosystem, the whole network, as we know, is the ETH network. So Ethereum, in that instance, because it is the asset that basically is used as like the gas fees, running that whole ecosystem, that's considered a coin. The same way Bitcoin's considered a coin.
So Ethereum is a native cryptocurrency of a blockchain.
Yes.
So there's only like a certain number of blockchains, and then there's a million of these like, coins that or applications that sit on top of these blockchains, like Ethereum, Solana, or Sui. And in those cases, the tokens are the currencies for those applications.
Yeah. So like, for example, we go back to Ethereum, like Aave would be a token built on Ethereum.
Yep.
So Ethereum being the coin, Aave would be the token.
Yep.
Solana would again be the coin, and something like Jupiter would be the token. So it's more like, understanding that obviously there's the infrastructure, that's the coin. And like you said, the application on top, that would be tokens that get created. Yeah.
I think if like a useful analogy would be, if you've got a city, a coin would be the currency of that city, what you use to, spend on a daily basis. A token in this case might be something like a movie ticket or a bus ticket, right? Something that you purchase that has utility and something that you can use on a day-to-day basis.
It's just an interesting way to put it.
Yeah. So, okay. We won't dive too much more into that because we've still got a crypto ETF to explain.
Okay.
So let's look at a crypto ETF. So the difference with that is you're not holding the cryptocurrency directly. You're typically investing in a stock or a fund that holds the cryptocurrency. So you're getting exposure to, say, a crypto asset that you want to, but you're not holding it directly. So typically you buy a cryptocurrency through an exchange, or you buy a crypto ETF through a stock exchange. A crypto exchange will usually hold the asset for you, or the stock exchange, the fund manager typically manages that for you, and you don't really have to worry about it. That would be the key difference, right?
Yeah, you're paying someone to basically look after it for you.
Exactly.
Yeah.
But with that, crypto ETFs often carry higher fees, and then like you can't really use crypto for other purposes, like sending it to other wallets and things like that. The utility is reduced when it's an ETF as opposed to holding the asset directly.
That's right.
The next one was interesting. So what causes price fluctuations?
Would you want to go this one first, Ed? I did the last one, I reckon.
Sure. So I think this one's like, I don't think I would have been able to answer a long time ago, because I think a lot of people see the price on exchange or just online and be like, what's making it go up and down? So if you were to dumb it down to really simple terms, it's purely buyers and sellers. It's aggregated on trade volume on a number of exchanges around the world. So let's say there's a big exchange, and let's just say there's one exchange that everyone uses. There isn't in the real world case, but to simplify, let's say there's one exchange. The price is based on whether there's more buyers or more sellers. So if there's more buyers and people are buying more of this asset, then that's going to send the price higher, as opposed to if there's more sellers, the price is going to go lower, right?
Yeah, that's essentially it. Like anytime you look at a chart and you just see this big, staircase that's going green to the sky, it's because no one's selling. There's constantly people jumping in saying, hey, look, I want to invest. I want to put some money in. They buy it. For every buy that you make, there needs to be someone willing to sell it to you. So if the next person that's willing to sell it to you, let's say something's trading at $2, but no one's willing to sell it to you at $2.10, well, then you're going to buy it at $2.10, and then boom, you become like that next green candle that goes higher, right?
Yeah.
And the opposite is true too. All of a sudden, the price just stops and it goes sideways, like we're talking about what Bitcoin's doing right now. It's because every time price goes up, people are just willing to sell, and that just, again, stops it from progressing.
Yep.
Yeah.
Absolutely. Nice and simple. Okay. What is the difference between a meme coin and Bitcoin?